Welcome back to the channel, guys. My name is Jess. So things are not shaping up well for Bitcoin after a test of monthly critical support on the recent close and the formation of a bearish engulfing candle on the weekly charts. So let's dive into the video today to talk about the recent developments on these macro charts, as well as taking a look at the shorter time frame to talk about the risk-off attitude that investors are taking moving into the next federal interest rate decision. Before we get into all that though, make sure you guys smash that like button and subscribe to the channel to get regular Bitcoin analysis every Monday, Wednesday, and Saturday. If you're after even more content, be sure to check out my free Telegram for daily updates as well as crypto and economic news. And if you're interested in my VIP channel, you can get more details over here. VIP gives you exclusive access to my personal trading setups with exact entry points, targets, and stop losses. Alrighty guys, so diving into the charts, let's go ahead and give you guys some context on the recent price action before we dive into our analysis. So over the last couple of days, the price action for Bitcoin has been excruciatingly dull, and we've had basically little to no movement over the last couple of days over that weekend period, and we can see just how dull the price action has been over that weekend just from this little dip alone. So this morning, opening on Monday and moving into our weekly candle close, we had a little bit of a dip downwards from that red candle there, and it moved down to essentially test the base of our current critical level of short time frame support, ending at $57.3 thousand. Now that really tiny move downwards alone has resulted in a 530% increase in 24-hour liquidations and a 132% increase in 24-hour volume. So the last weekend has been very, very slow. However, that is not to say that this entire month and this entire week has been dull. It has actually been a really, really interesting one. This entire month, so we started off with a massive move down all the way to $49,000, and then we had our most recent weekly candle close at our local high here at 64,200. So after that, we had essentially done not the impossible, but done something quite amazing, right? Bitcoin had recovered really well from this massive flush downwards to break above key resistances here at the midline, or that blue dotted trend line in our macro descending channel, as well as above this key resistance here in our short time frame horizontal channel of consolidation. However, after getting that weekly candle close, we faked it was essentially a fake out, right? We broke above and then just to crash rapidly back into that same level of horizontal consolidation, and we are now testing that base of support there. So why is this happening? What does all of it mean? Let's go ahead and start off with our weekly chart and our analysis on our recent weekly candle close. Before we get into any more analysis, guys, let's share a quick word from our sponsor, Bitunix, where you can get 15% off all of your trading fees and up to $5,500 in sign-up rewards by creating your free account using the link down in my description box. Bitunix is an emerging cryptocurrency exchange committed to providing you with a secure, convenient, and highly functional trading and investment platform. Available across all countries as a non-KYC exchange, get global access to over 150 trading pairs with minimal fees on both spot and futures contracts. Join today to get $5,500 in sign-up rewards and get 15% off all of your trading fees by signing up using the link in my bio or by using the code 1GG3 when you create your account. So taking a look at our most recent weekly candle close, guys, it has obviously not been a good one. And moving into this period as well, we were actually experiencing what should have been a bullish, period, right? We had two really, really indecisive candles, right? Two spinning top formations. But following those two really indecisive periods, we had a really strong green engulfing candle for the week following that, which was that close that we've just had last week. And so that should have confirmed generally this sort of pattern here where we have a spinning top followed by a green engulfing generally starts to confirm the formation of a macro bullish reversal. And so that reversal, would have happened following this really, really red week that we had all the way back here in July. Unfortunately, however, this week has not only been bearish, where we topped out at 64,200 here and moved back into this range of support here, but we've also formed a bearish engulfing candle here on the weekly time frames. So bearish engulfing candles are, as you can guess from the name, bearish, and essentially it tells us that the buying strength that we had in that week prior has been completely overshadowed by the selling pressure and the selling strength that we have experienced in this most recent following week, right? And that's exactly what we've seen, where we've seen the close price for this red candle engulf the prior opening price of the green candle over here in the start of August. So Bearish engulfing candles generally signal the start of a bearish continuation, whether that be a particularly steep one where we see a move all the way down to the range low, or just a little one is, totally up to the smaller time frame charts. But it tells us now that we have a higher probability of experiencing potentially a red next 7-day period or next couple of day period in comparison to a bullish next couple of days. So the weekly candle close is only one piece of the puzzle, guys. There's a lot more analysis that we need to do. But before I dive into the short time frame and discuss other surrounding factors we have in the market right now, I do really quickly want to talk about as well the recent monthly candle close where we are testing a critical level of support. So over the last 5 months, guys, while Bitcoin's been kind of consolidating within this descending channel period that we mapped out on the weekly and the daily time frame, despite those kind of big chops up and down on those smaller time frames, Bitcoin has consistently, over that last 5-month period, always had a monthly candle close above this sort of key and very critical level of monthly support that we've established throughout this entire period of time. So that monthly support lies between $58,700 to $61,000, and essentially it is the monthly candle close for the pi cycle high here, as well as up to the top of the range, the monthly candle close for the all-time high. So if we take a look at the last 5 months of candle closes, these 5 over here, we can see that every single month consistently it has either been, just slightly above that top of that range of support there, or at the very least above the midline of that support, so that blue dotted trend line within that middle of that sort of ranged support. However, what we can see from our most recent monthly candle close, which is this one over here, guys, is that we have actually, for the first time within this 6-month period, and ever since breaking above this level in February, closed back below this, the top of that range of support, as well as the midline here, that blue dotted trend line, and closed actually only just above the base of that range of support here at 58,900, right? And so, yes, structurally, technically, it is still fine, right? We are structurally still above the level of support and support until it's not. However, in terms of actually analyzing the candle itself, what it's basically telling us is that over this last month period, we have seen the largest loss of strength that we've had within this entire 6-month period, right? Which, is kind of understandable if you take a look at the candle itself. We had one of the largest flushes downwards that we've seen below that, macro channel, and also below that level of support there, all the way down to $49,000, right? Absolutely huge. It was one of the largest liquidation events we've had in crypto for the last, 6-month period. And also, despite that massive flash downwards and that recovery, we've only just managed to close above that level of support, despite what has been, or what should have been, a very, very bullish, last couple of weeks, especially after that really bullish weekly candle close above $64,000. So it is a little bit of a warning sign, particularly when we have a look at the difference between this sort of bullish segment over here in comparison to the bearish segment. We've seen a lot more selling strength and a lot more bearish strength, and also an inability to recover, as we've seen from the red candle close. So it is on a macros time frame shaping up to be a little bit more concerning, guys. Both the weekly and the monthly charts, while they are, like I said, only one piece of the puzzle, right, there is a lot more to look at, and there are key levels and trigger points. Just because we've had a red month and a quite bearish looking red month doesn't mean that Bitcoin's going to nuke all the way downwards. That isn't the conclusion we're drawing here. We're just saying that it's shaping up to be not particularly bullish, and it doesn't look like, as of right now, that Bitcoin is headed for a range high retest anytime soon, anytime within the next week or so, right? So that kind of takes us into the shorter time frame charts, guys. What's going to sort of, be our first warning sign that we are going to see a range low retest? And as opposed to that, what are the other levels that we have to look out for on the way down? What are the bullish triggers that we have? And what sort of other economic factors do we have shaping up this next segment of price action here? So moving into the 4-hour time frame, guys, really not all that much has changed in terms of the short time frame analysis from my last video. We are still very much above our key level of short time frame support here at $57,300. And so while Bitcoin chops within this horizontal channel here, it'll be pretty much as if we had never gotten this breakout, right? We are still going to be within that sort of neutral territory. And as long as Bitcoin remains between 57.3 and 61.8 or 61.7, really all these movements have no real significance, no real consequence in terms of any sort of triggers up or down. It is just a chop zone. It is purely just sideways consolidation. However, as we approach this sort of bottom range here of that support zone at $57.3 thousand, we're going to teeter on the edge a little bit, and it's kind of important then to really consider the potential bearish case scenario there. So in losing our level of support here at 57.3, the key trigger that we are looking for is a 4-hour candle close below our bearish trigger or our sell side liquidity here at 56,050. So if you guys take a look at the candle right now, it looks like, over the last 3-ish hours, we have been really struggling to establish support, and particularly after that recent monthly candle close and weekly candle close, it is probably quite likely that we do flash down to $56,000. But it is the question of where we close. So if we get a 4-hour candle close above that level there, well, okay, yeah, obviously that wasn't great, but it isn't a trigger yet. We haven't triggered the move down into this next region over here. So a 4-hour candle close below $56,000 is when it becomes quite likely then that we move in to see a range low retest here at $53,000 to $54,000. And there is a little bit of an elaboration on this particular scenario. So first of all, 4-hour candle close below 56,000, and that takes us into the daily chart. So on the daily time frame, what that will mean is that we will move into this next liquidity zone over here on the high time frame. I've pulled up liquidity swings indicator and the VRPV, and that starts at 56,500. So once we get a daily candle close below that level over here, right, which will already be below if we close below here, the daily candle close below this $56,500 level will then trigger a move into this liquidity zone over here to test the next base of high time frame support and the next lower liquidity zone or change of character level that we have here at $54,000. So that will be the next key level, and that's not quite a range low retest just yet. It is just kind of like just above that on that level of support. However, falling below that, so getting a daily candle close within this next liquidity zone here, this green box, is when it is very likely then that we are going to see a range low retest over here. So that takes us into about $53,000 and potentially even $52,000 depending on how long that price action development has taken and where we are in terms of the trend line. Moving into this liquidity zone though as well also means that we have a potential to also see a move as low as 49,000 or 48,900, the base of this liquidity zone here, and that sell side liquidity level that we saw all the way back on the 5th of August. That is the maximum bearish move that we have here in terms of still retaining some sort of potentially bullish macro scenario, because while we're above the sell side liquidity level for the prior range low retest, we can potentially expect a recovery depending on how the charts develop. It is a daily candle close, however, below this level here, below sell side liquidity, then that we confirm the loss of our macro structure, this descending channel formation, and can expect a bearish continuation. Keep in mind, guys, in a previous video that I made where we spoke about the Gaussian channel on a 3-day time frame, maybe it's worth it for me to pull it up. Let me have a look how I can show you guys. Let's go on TradingView, Bitcoin. Let's just pull up a Bybit chart. I don't really use it, so it should be empty. And we'll pull up a 3-day time frame and the Gaussian channel. So remember, guys, I spoke about in the last video where pulling up the Gaussian channel, I spoke about the fact that this time, if we did actually get a range low retest and we got a 3-day candle close within this sort of range, that would be the first time since all the way back in October 2023, or maybe even further than that, March 2023, that we would have broken back below the base of the 3-day Gaussian channel and signaling the start of a macro downtrend. So this next range low retest is quite critical, and if we do see that sweep low, we do want to see also a quite rapid recovery so that that 3-day candle close is back above that Gaussian channel range. We talked about that in another video though, so if you guys want to check out that video, you can go find it there. Moving back to the shorter time frame. So that's the bearish case scenario, guys, and that's really what's going to trigger that is the loss of, first of all, support and the sell side liquidity level. Bearish case scenario is still very much the same, guys. It's going to be a breakout of that $61.8 thousand level of resistance, our short time frame resistance, as well as the dotted blue trend line, the midline of our macro channel of, consolidation, the huge ascending channel, and then a break above $64,000, this bullish trigger here, or buy side liquidity for our next key level of resistance to trigger a high time frame bullish continuation to the range high. Pretty simple. All of that, it's pretty clear as per the charts. So now that we've sort of mapped out all of our key scenarios, bullish, bearish triggers, and what that's kind of look like, what those developments are going to look like on a short time frame and a daily time frame, now it takes us into the conversation of likelihood. And that is, guys, when it starts to get honestly a little bit murky. So we've had a lot of chop, guys. We already know that. And I've talked about potentially seeing a deviation to retest the sell side liquidity before potentially seeing that recovery, just like we saw here, deviation before recovery and a breakout. However, moving into this next couple of weeks of price action, we have a lot of economic news coming out, and that is going to be sending the price really quite chopping all over the place. So it is even likely that we see a drop below 56,000 and then a rapid recovery after a huge sort of liquidity grab. I'm really not quite sure because it's economic data. I can't predict economic data and I can't predict what it's going to look like, but I can tell you guys about it and, about the sort of risk-off attitude that investors are taking, especially moving into this period. So over the next couple of weeks and the next 2 weeks in particular, we have a lot of economic data coming out. So the first week, so this week we have NFP data and jobless claims data, and then next week we have CPI, PPI data, and then on the 18th of September we have our federal interest rate decision. Now, usually moving into the federal interest rate decisions, we have generally seen a fair bit of chop. So if we move and take a look on the daily chart at all the kind of times we've had FOMC data or FOMC meetings, it has generally been preempted by a period, a 6-day period here where we saw an 8% drop downwards. Over here we had an 8-day period where we saw another 8.8% drop downwards. Over here we had another 6-day period, again 3.5%. We generally preempt FOMC meetings with a fair bit of downwards price action. Sometimes it's a lot, sometimes it's only a little bit, like this one was only 3.5, but generally Bitcoin doesn't move into these sort of events with a massive green sort of period, right? Even if we do, have a green peak, moving into that data, we generally go down, right? And that has always kind of happened consistently in the last 6-month period, and probably even longer if I wanted to map it out. So we already know from that information that over the next 2-week period, we are likely to see a little bit of chop, and more likely than not, downwards chop in comparison to bullish chop, right? However, this specific interest rate meeting and this specific decision that we have coming in September holds even more significance, I would say, than the last, how many is this? The last 4 decisions that we've had within that last 6-month period. And the reason for that is because when we had this massive liquidation event all the way back here on the 5th of August, and, Bitcoin was honestly looking horrible, right? We had dropped below sell side liquidity here at 53,600, and we'd flash when it was the largest liquidation event we'd had in a long time. We dropped like 12%, right? It was crazy. But one of the main reasons why Bitcoin was able to recover, and S&P 500 as well, was able to recover so quickly from the crash and close back above the range low for our macro structure, was because of news that came out about jobless claims. So if you guys were there for the video that I made in that period, or if you guys were just following along, you would know that really quickly after that, we had information then that the jobless data that came out that, caused the crash was also going to lead to a massive shift in the potential for interest rate cuts. And we've seen that in history as well, as the effects of high rates start to leak into the labor market and the job market, that is generally when we see a mass call for federal interest rate cuts, because it's starting to affect the economy in ways, in negative ways that aren't balanced out by the positive effects of cutting down inflation or whatever. I probably explained that really, really horribly. You can probably go listen to an economists to explain it better, but that gives you guys a general gist, right? And so when we got this massive increase in the probability of a rate cut, and not even just a regular rate cut, not a 25 basis point rate cut, but a 50 basis point rate cut. For example, if we go over to Trading Economics and we go and take a look at the forecast let me see. Yeah, Fed interest rate decision. So we're taking it from 5.5 to 5. So a 50 basis point cut is the forecast. That is when we saw that massive recovery, because as the cost of debt decreases, we generally see the asset markets rise. And that includes cryptocurrency, S&P 500, etc., etc. So a lot really hinges on this next interest rate cut. And as people have priced that in that massive recovery there and, you know, moving forward here, we're going to see a massive amount of de-risking and de-accumulation as we move into that decision, on the basis that, you know, if we don't see that, we are very likely then to see a really, really bearish move, right? It's going to be quite a aggressive reaction if we get maybe potentially even just a 25 basis point cut. So a lot of that is obviously stuff that we can't predict as retail investors, and stuff that we just simply have to react to and take opportunities to. So that is why the short time frame and mapping that out is really important. And now we know kind of moving forward what that needs to look like in terms of shaping up to either be bullish or bearish in the macro and short time frame. Alrighty guys, that is all the analysis that I have for you today. If you enjoyed the video or you learned something, don't forget to smash that like button and subscribe to the channel. If you're after even more content, be sure to check out my free Telegram for daily updates as well as crypto and economic news. And if you're interested in my VIP channel, you can get more details over here. VIP gives you exclusive access to my personal trading setups with exact entry points, targets, and stop losses. And if you are a trader, don't forget to get 15% off all of your trading fees by signing up down below to Bitunix. I hope you guys have a great week, and I'll catch you in the next one. Bye.